Hello and welcome to First Talk, where we simplify your super. My name's Peter and I'm here with Andy and Jason, the financial planning team here at First Super. And today we're going to talk about Centrelink, the age pension and the income test more specifically. So Andy, tell us about Centrelink, the age pension and the income test. What is it?
So the income test is where Centrelink actually looks at your financial assets, and your financial assets are like your super, money that you got in the bank account, shares, things of that nature, and they actually apply what they call a deeming rate. So they determine that this earns a certain amount of interest. Whether it does or doesn't, they don't care. They're applying these rates. And from that, they then determine you're deriving so much income from those investments. And the other side of it is as well, if you are working in some capacity or your partner is working in some capacity, they take their employment income into consideration as well.
Okay, so it's your deed income, it's your employment income. What other income is included, Jason, when we look at the income test?
Yeah, so I mean, they look at if you're a couple, potentially you've got a partner that's working as well. They will count their income. Effectively what it is though, basically the more you earn, the less they're going to give you under the income test.
So rent, if you've got investment property, it's your rental income as well?
Rental income too, yeah. So I mean, the more that you earn, the less they'll give you, which to some people they find a little bit unfair, but that's the test that they have.
But the thresholds are quite wide, aren't they? Let's be honest around it. So as a minimum, you've got to be earning over $8,000 from your investments, and for most of our members, it's mainly going to be superannuation that they're deriving that from. So if their super is around about the $100,000 mark or something like that, potentially they're not going to be earning over the lower threshold, which is around $8,000. So they're going to get the full age pension. But it goes all the way up to about $82,000.
Yeah, for
that's
a couple.
Huge for a couple.
Now I've got a lot of people that I talk to, and one of them is getting to age pension age. They've got a younger partner, and they think that they can't apply for the age pension because the younger person's working. Is that the case, Jason?
No, I mean you can apply. Like a lot of people think if I'm working at all, I'm not entitled to any age pension. But it is broad. They do encourage you to continue working and still give you some age pension. So as Andy mentioned, the income test at the top end is $82,000. So they'll still give you some age pension if you're under that amount.
But the thing around it is that they kind of assess you as a couple, don't they?
Yeah,
If you're the person that's of age pension age, and you've got a younger partner, they're going, well, it's all your assets together we're taking into consideration, and then they halve the pension and give it to you. So, I mean, there's generosity around the ranges, but they're a bit harsh on, I think, on their criteria.
One of the things that they have as well that does help people work, and it's something that we often sort of experience, is what they call the work bonus.
So tell us about the work bonus. What does that mean?
So the work bonus, effectively with the income test, the first $300 a fortnight of employment income that you earn, they don't count towards that income test. So if you're only working part-time and only earning a few $100 a week, you still might get the full age pension, so it's pretty lucrative.
So you can still work and you still can get the full age pension, whether you're single or you're part of a couple as well.
Yeah, that's right.
And I've heard that they actually bank it up. So if you get that $300 per fortnight going into a bank effectively, and you can use it from year to year. So if you do a short-term contract and you earn $5,000, you don't miss out on the age pension because you've banked up that $300 over a period of time.
Yeah, I mean, you have people that do work in school holidays or something like that, do a few weeks a year.
Yeah, I've got a member that he resides out in the regional area of Victoria, and around about summertime he goes out and does fruit picking.
Right.
And that's how he uses
example. So he gets the age pension and he gets a bit of income as well.
Yep.
Okay, so if people like yourself, Andy, you've got a lot of kids, you're going to be working until you're about 80. So you can still work beyond age pension age and get some of the income. You've got to be careful of things like rental income, what we call the deemed income. Whether you've got a partner that's over age pension age or under age pension age, it doesn't matter. Go and talk to Centrelink. There are people at Centrelink that are called FISOs, or Financial Information Service Officers. If you go and talk to them, they'll talk to you about your circumstances. Obviously, you can come and talk to us and we can give you some information about it and around it as well, and see how the age pension engages with your super and how you can make the best of both, potentially getting some of the age pension and using some of your superannuation as well. If you've got any further questions, please come and talk to us. There's also a link that you'll see at the bottom of the screen to come in and have some further questions with us, and make an appointment to come and talk to us at the financial planning team at First Super. Thanks for joining us today, and we'll see you next time.